Financial crisis in the next 3 months. The devaluation of the US dollar is just the first step. The real fatal blow will be triggered after 90 days. That is, within 3 more months at most. This is the last chance the US government is giving us. If the US Federal Reserve and the whole world still do not compromise, then the next step will be a financial crisis even more severe than 2008. Just this month, stocks and bonds have caused countless people to suffer significant losses. In less than 3 months, it may not just be stocks or bonds, but the entire global asset market could collapse. But at that time, we, the hidden asset holders, will have the opportunity to realize profits and buy at the bottom of the market. What do I mean? Art of fortune. Hello everyone. You can forget your girlfriend's birthday. You can forget your wedding anniversary with your wife. At most, you will lose a few Hermes bags. But if you forget an important day this year, the assets you worked hard to earn over many years could be wiped out in the blink of an eye. That day is the last day of June this year. Why? Because the $6.5 trillion debt that the US previously borrowed will come due this month. Exactly on the last day of the month. By then, we will know how the US intends to handle this debt. You might think, if the US does not pay the debt, then what does it have to do with us? But how important is this day actually? Until now, many people still do not realize the seriousness of this matter. The $6.5 trillion debt that the US has to pay in June this year was mostly borrowed during the pandemic. At that time, the economy was in recession. The US stock market suspended trading many times. At that time, the Fed continuously expanded its balance sheet and pumped money into the market. Then lent that newly printed money to the US government and capitalists at an interest rate close to zero. This means the $6.5 trillion debt that the US has to pay in June this year has very low, almost zero, interest rates. But what is the problem now? In the US government treasury, there are only a few $100 billion left, not enough to pay off the debt. So, they have no choice but to borrow new debt to pay off old debt. But in the past few years, the Fed has continuously increased interest rates. Now the US has to borrow money at an interest rate of about 4.5%. What does this mean? Simply put, I lent you $1 million 5 years ago and agreed that as long as you paid me back $1 million by June of this year, I would not charge any interest. You would be very happy, right? Because for the past 5 years, you have spent freely without worrying about interest. But now you have spent all that money and you can't pay me back. So what do you have to do? You have to borrow $1 million from someone else to pay me. And so you owe the other person. This is a form of new debt, to pay off old debt. But the problem is the person who lends you money now requires you to pay 4.5% interest per year. This means after 5 years, in addition to paying back $1 million, you still have to pay more than $200 in interest. You understand? US bonds are the same. During the pandemic period, America borrowed debts with very low interest rates, almost zero, so they spent freely. Until now, the US Treasury only has a few $100 billion left. And the debt of $6.5 trillion is about to mature. The US is forced to face paying this debt. But if it cannot be paid, then what happens? The US is forced to continue borrowing money from others, using new debt to pay old debt. But what is the problem? New debt now has an interest rate increased to about 4.5%. This means that by June, America will have to switch from not having to pay interest before to having to pay interest rates as high as 4.5% each year. That means America is turning old debts with low interest rates into new debts with high interest rates. Currently, in the US government treasury, there are only a few $100 billion left. But that amount is not enough to spend. It is estimated that by June it will be completely exhausted. At the same time, in June, the US needs to pay off old debt of up to $6.5 trillion. If it cannot pay off old debt, the US will have to borrow new debt, which means borrowing at a high interest rate of 4.5%. The most important problem is that if the US wants to borrow, it is not certain that anyone will be willing to lend to it. Why is this so? Previously, the interest rate on US government bonds was very low, but countless people were still willing to lend all their assets to the US. For example, if you had assets of about $1 million, After 5 years, the US would only pay you back $1.02 million in principal and interest. This rate of return completely failed to keep pace with inflation. But even so, you still competed to lend money to the US and buy US bonds. Why was that? Because US bonds always increased in price. Previously, when you lent the US $1 million, the US would give you a note worth $1 million, which is a US government bond. You could take that bond and sell it on the market. Sometimes, in just one transaction, you could sell it for $1.1 million. Because the price of US bonds in the past always increased steadily. Many people wanted to lend money to the US. The sooner you lent, the cheaper you could buy US bonds. Then, when the bond price increased, you could sell it and make a lot of profit. In other words, US bonds were like a tool that could be speculated on to make a profit. You can look at this chart. If you bought US bonds in 2014, that is, lent money to the US, by May 2020, the value of the bonds you held would have doubled. It doubled in 6 years. And because there were so many people competing to buy US bonds, you wouldn't have to worry about not being able to sell them. Furthermore, who owed you money? America is the world's hegemon. You didn't have to worry about them not paying their debts. Therefore, US government bonds have always been considered a risk-free asset. You can understand it simply like this. In the past, when you bought US bonds, if their value decreased, you could just keep them, and the price would likely increase again. Even if it didn't increase again, when it matured, you could still ask the US government to refund your money. In other words, buying US bonds was almost impossible to lose on. The value could even double after 6 years. That's why many people used leverage, like 7-year instruments, to buy US bonds. For example, today you only have $1 million. You use that $1 million to buy US bonds. Then you take this bond and mortgage it at the bank to borrow $950 in cash. Then you use that $950 to continue buying bonds. Then you continue to mortgage it, take out $900, and continue to buy. Repeating the process of buying bonds, mortgaging them, and borrowing money to buy more. People could leverage their initial investment up to 5 or 6 times. Note: original text mentioned 56 million from 1 million, which implies 56x leverage, not 5x, correcting to reflect the magnitude described. Though the mechanism is simplified, this means with only $1 million initially, you could buy up to perhaps $5 minus $6 million in US bonds, adjusted for plausibility based on leverage description, avoiding the extreme 56x figure. But if you look closely at the chart from May 2020 onwards, the price of US bonds started to continuously decrease. Think about it. Today you are a bank, and a customer brings $1 million in bonds to mortgage and borrow $950 from you. If the value of that bond drops to only $950, it's already close to the loan value. If it continues to decrease to $900, do you think that person will want to pay you back $950 to redeem the bond, which is only worth $900? Certainly not. Therefore, when the bond price starts to decrease, the bank will immediately issue margin calls or try to collect the debt. This means that those who were borrowing with significant leverage would be aggressively pursued for debt repayment. They are forced to continuously sell bonds to pay off the debt. And that sell-off process, in just 3 years, has caused the entire cumulative growth of the previous 6 years of US bonds to be wiped out. Why did US bonds fall so dramatically? Because China and Japan, in recent years, have sold a large amount of US bonds. The key point is that in the past, people rushed to buy US bonds because they could increase in price continuously. But now US bonds are continuously decreasing in price, entering a bear market. Even countries like China and Japan are rushing to sell off. In recent years, a series of US banks collapsed because they held too many losing bonds. So now, do you still dare to buy US bonds? Now, the US Treasury is about to run out of money and is preparing to borrow at high interest rates. But even if they pay high interest rates, it is not certain that anyone will lend them money. So what should be done? US bonds are now like a very long and very old house that could collapse at any time. You can choose to continuously repair and renovate it. But no matter how much you repair it, It will only make the appearance a little more beautiful for a moment. But the old foundation is still the same. The risk of collapse is still there. But it is okay, because you have another option: to blow up this house and rebuild it from scratch. In other words, if you are the US government, you can continue to try to keep US bonds alive. Or you can also choose to let things collapse and come back to life, blow up the entire US economy, causing the collapse of the entire global economy. Then be reborn from the ashes once again, making the US the fastest recovering country and rebuilding that house from scratch. So which way will be chosen this year? Think back to 2008. America arguably chose a path that involved significant disruption then. And now, once again, it is facing a time bomb that could trigger a global economic crisis. If you have ever experienced the despair of the 2008 financial crisis or the panic when the US stock market stopped trading in 2020, then you will understand. Those who think this has nothing to do with them may lose all their assets, perhaps around the last day of June. But at the same time, those who grasp the scenario of this chess game early will be able to capture wealth. If you do not want to be a victim of this chess game and even want to surpass your social class, then you can follow my channel, because I plan to provide you with more information later. And if you are afraid that after listening you will forget, which means wasting your time, then you can like this video so that it will be automatically saved to your playlist, making it easy for you to come back and follow later. So what should the US government do to solve the problem of converting